Hi, Chris Duff over at Serious Land Capital, vacant land funding partner. So, to update many of you all, and pretty much anybody who's been in email contact or some form of written contact with us, you'll be getting an email here this afternoon. Been meaning to set up a new weekly email based on requests of us for the last couple months here. It's just other priorities and so forth, as any entrepreneur can understand. Just kept getting in the way, but finally launching this one. So calling it Serious News, super concise, value packed into the email. Think of Mosey Minute. Type of content, basically, what's top of my mind and any kind of key insights that I think are relevant to share on a weekly basis, and then maybe any other events that are happening or other things that we're up to. So you should be getting that here shortly. But yeah, I was trying to figure out, okay, what's kind of best format and cadence for this, and I used to do a lot more email marketing for other businesses that I was involved in the past, and try to keep it plain text and easily readable. And again, everybody's attention spans are so short nowadays, so I'm just trying to be very mindful of that. So, picking the tactics from some of the best email copywriters out there and trying to emulate those formulas. So hope you enjoy that when it hits your inbox. And if you have any kind of feedback regarding that or other topics you want to hear me write about, feel free to reply back or let me know in another way. And today's topic was just kind of providing further context on some of the market shifts that are ongoing. I know I talked a bit more about that earlier this week, regarding one of my core partners, the $200 billion hedge fund that he's at. They were pausing all deals, and we're just being even more mindful, even over the past few days, too, on how we're updating our funding strategy. We're not going anywhere. We're still funding deals. It's just setting up for the long term and recapitalizing in order to cherry pick more distressed assets. I'm just paying even more attention to macro level data at this point. Obviously things are changing super quickly. So, I was seeing a report even earlier today that consumer sentiment within the U.S. is actually at its lowest level, even lower than the trough of the GFC, over 15 years ago at this point. So, not great signs there. We have to be careful. Consumer sentiment, that's that's soft data. It's not necessarily reflective of actual purchases being made and true consumer activity. That's going to be hard data. That's basically impossible to track, at least with current methods, on like a real-time basis. So we'll start to see that over the next month to 2 months roughly. But I'm not surprised at the direction the sentiment is going, just given all of the uncertainty within the larger market. But again, it's not always reflective of where the hard data is going to be at. So we have to be mindful of that. Nevertheless, I am betting that the hard data is not going to be particularly robust in a positive sense when it does start to come out. So I'm trying to be ahead of this market as much as possible here. And so, on our side, again, we're just more risk off. We have, two roughly $1 million exits that we're really gunning for. One is already under contract to close in the next 3 to 4 months from a very well-financed developer. Even if we just landed those two deals going well, like for the rest of the year, that would be an incredible win. Like it would reset our capital in such a major way that like anything else in our portfolio, like they're solid deals. Obviously you want them to be profitable, but they don't matter nearly as much. And so some of these smaller deals, two in particular that we bought over like the last 3-ish months, I wouldn't have funded in this current environment. And so I want to offload them ASAP. So we were just doing some price cuts earlier today. Even if we break even on them, doesn't matter. I want cash out, recapitalize ASAP on some of these deals, and just get ahead of the market because I think it's going to be even more negative from a consumer sentiment and just purchasing activity perspective, even over the next 2 to 3 months. Just look at your own data. I'm talking to some other very well-informed land investors. Typically, like right now is the absolute peak buying season, right? Spring. It isn't really panning out quite as much. Like we saw that nice bull run in mid-November to mid-January or so, offloaded a bunch of portfolio. And you'd expect that really to continue. Maybe some of you are still seeing that in certain markets. Great assets are always going to move. But, in terms of like really consistent activity, and moving things quickly, like usually this is kind of best time of year across most of the country, and we're not quite seeing that. So I'd rather get ahead of the game, get rid of some assets that aren't going to be huge value drivers anyway, and I think have the chance to really underperform the longer that we hold them. So I want to get those off the books here ASAP. Something to keep in mind. Maybe you have a different opinion on that. Just sharing how we're thinking about this internally. So that's just something that I want to note. Also, like until we get some more of this hard data, again, we have to be careful understanding just sentiment and kind of the thought processes across the entire US. So, I try to look at different news sources just to get a flavor of the bias across the political spectrum and really understand, okay, because not everybody can kind of get their news from different places that are going to have their inherent bias. Like it's just how the world works nowadays. So I like to account for opposite sides of the spectrum on where are people getting their news from and what type of thought patterns might be kind of incepted into them. So, if you look at something like CNN, for instance, you'll see a lot of kind of the negative tariff for economical, or that's more of the headlines there. And if you flip over to like Fox News, more of those stories are buried or they're kind of spun in a, more anti-China, hey, like we need to fix the bad actors, get them in line and try to kind of brush aside some of the impact from the US perspective. So, those are just two examples there, but like, just check for yourself, right? Like you can really see if, one person was only getting their news from like one of these sources, that it can really directly impact the way that they're going to be thinking. Us as land investors, most of our properties are going to be in more conservative red states on average, not always. And so the folks buying and potentially selling may still be feeling a bit more safe or bullish about the economy, which is good for us in the short term. But, if some of that hard data starts to turn, some people start losing their jobs, real earnings go down, labor market shakes up a lot more, prices start going way up for basic goods here, that can turn in a hurry regardless of what geography you're operating in. So a lot to pay attention to. Hopefully this is helpful for your own business. Again, we're setting ourselves up for decades of continued success here, and being very, very mindful about where we're allocating risk at the moment. Capital is just going to be tighter for everybody, regardless what industry that you're in. So, we're being very, very mindful of that and, walking the walk accordingly. So with that in mind, again, we're still open for business for really solid deals. Don't get it twisted as far as, thinking that we're just, being on pause. No, that's not the case. It's just we're adjusting our risk stratification here. So seriousland.capital for any of your funding needs. I actually got a lot more activity even over the last couple of days. People are still, they're finding deals. It was a little slower earlier this week. Now we're kind of back in the running. There'll be a lot more to review on Land Daily Diligence this coming Monday. Zero cost review of your land deals. And then landpricer.ai was having a lot of in-depth meetings about about that this week. Bringing on a CTO to get the 2.0 version of this product ready for public launch. I know it's been super delayed, but I need to make sure that it is a very, very solid product prior to releasing. So I'm going to be emailing a lot of you about that here shortly as well. Probably podcasting about it again, especially how I'm structuring the deal and so forth for the CTO. So that can help you in your own partnership agreements. Subscribe and share. Take care, everybody. Bye.